Today, I want to talk to you about one of my favorite stock market quotes. An investment in knowledge pays the best interest. Hi, I'm Kevin Tenderson from Flex Financial Trading Group, and we help people generate income, create consistent profits, and get on the path to wealth and financial freedom through the stock market. So, back to the quote: an investment in knowledge pays the best interest. Now, I want to take this a little bit further. So, to me, just understanding the market, you're going to pay the market tuition one way or another. So, eventually, you're going to pay for the knowledge you need to be successful. So, you think about that. There's a couple different ways that you can go ahead and pay the market tuition. One is, jumping right in, right? Just going into the market, starting to trade and invest on your own, learning the hard way, I like to call it, getting into the market. That's kind of the way I did it, just jumped into the market. Courtney and I talk about this a lot. We were day traders when we first started, and we paid the market tuition by learning in the market, right? Losing money on trades, doing things that we probably didn't have any business doing at the time, didn't have enough knowledge, didn't have enough, uh, you know, studying or understanding of the market. And we just jumped right in and started trading and tried to figure it out. And that's one way to pay the market tuition, right? You're in the market, you're losing money, you're doing trades and trying to, keep track of everything that's going on. And eventually you're going to pay the market tuition that way, right? You're going to lose money and learn the hard way. So there's other ways of paying the market tuition as well. So you can take courses, read books, spend time, get a mentor or a coach, have someone kind of show you the way to do it, teach you a system, teach you a strategy. And that's another way of paying the market tuition, right? I think that's the better way to go. It's better than kind of learning the hard way, but that'll kind of get you on a faster track, get you doing some things. But eventually, to learn what you need to do and be successful in the market, you're going to pay that market tuition. So, how does this pertain to you in the situation that we see in today's market? So I was hoping you'd ask, and I'll go ahead and jump into that and kind of describe some of the market conditions that we're seeing right now. We see the market kind of, tumbling down, right? There's a lot of talk about recession. We're seeing stocks that hitting those 52-week lows. We're seeing companies like Nike just came out and they have a lot of inventory left over, and they want to sell it at discounted rates, and all these different things are going around. We got inflation, we got the Fed raising interest rates. There's all these different things impacting the market, and we're seeing a market that's tumbling and kind of going down. And from my experience, people have a lot more success in bullish markets, right? So when the market's going up, everyone is a genius, right? We hear that all the time. It's easy to trade in a bullish market. You're buying shares, they're going up. You're selling shares at a higher price, and you're making money. If you're investing in long term or you're holding shares, they're going up, so your account's increasing. And in a bullish market, it just seems like people have a lot more success. Um, Now, when the market turns around, that's when people start to see some struggles and really kind of get back to, paying that market tuition if they're doing it on their own. The strategies that they've been using no longer work. So you've been in a bullish market, you're doing certain things, your account's increasing, you're having success, and now you're seeing that those strategies no longer work. And if you are investing long term, those share prices are falling, right? So you're seeing your account balance fall, you're seeing different things, and really just that's when the struggle comes in, not really having strategies to be successful in markets that have turned around and starting to go down. And another thing is when this happens, right, and your account balance is going down, things are negative, and you're not really doing that well. I've noticed that people really don't like to talk about their finances, right? So not let alone losing money in the stock market, you probably just don't talk about your finances out there anyway. So now, if you've lost money, you're not quite sure what you're doing, and your account is declining, and that's really when you're like, hey, I'll be able to figure it out. I'll go ahead and keep learning the hard way, keep getting in here and figuring it out. I'm not going to tell anybody what's going on, and I know that from experience, right? Like I said before, we were in the market, kind of learning the hard way, losing money. And I was just lucky to have someone like Courtney with me where we could kind of talk about it together. Like, hey, we're losing money on this trade, losing money on that trade. And we kind of helped each other through it and kind of figured out some systems and strategies that worked. But that is something that, a lot of people won't do. They're kind of in it on their own, they're figuring it out. And that is another way that kind of leads to paying that market tuition and can make you pay a higher price for it, right? You're losing money, you're trying to figure it out on your own. You really don't want to let anybody know. But that gets us back. exactly to paying that market tuition. So again, I said it before, you can kind of choose the way you want to do it. You can get a coach and a mentor, or you can learn the hard way. I learned the hard way, so I'm not saying one is better than the other, but I know one works much quicker. So eventually we did get some coaches and mentors to kind of help us out, and that's something that you can do. So wanted to kind of jump into some things. If you are kind of having those struggles, if you are in the market right now, kind of doing it on your own, trying to figure it out, what can we do to be successful in this market with these market conditions that we have going on? And I'll go ahead and go over 3 things that we can do today. So the first thing that we can do is a trade that I like to call, or the trade that we call bear call spreads. You've probably heard of it before. If you haven't, it's a great trade where you can take advantage of markets that are declining. And the reason is because you actually can generate profit and income by selling an option contract off of an option contract that you purchased. And it's a great way to generate income in this market because you actually don't have to own any shares. So you're not buying shares to be able to do this trade. You can still generate income and profits. And that's why we like to use it, because in a market that's declining, if you're able to generate profits without owning shares, it's a great way to kind of, keep adding cash to your account, keep bringing in money. So bear call spreads, that's a great one. If you haven't done that before, haven't heard of that trade, there's a few ways you can get more information on it. Look us up, ask us some questions. We can help you out with that. But one, bear call spreads, that's a great way you can generate income in a market like this. So number 2, the second thing you can do, if you already own shares, right? If you already own shares of a company, at least 100 shares, so you do need to own 100 shares for this, is you can continue to write cover calls. So cover calls is a big thing we do in our program. You do have to own 100 shares of a company in order to go ahead and sell cover calls. But if you already own these shares, say your long-term holds or shares that you're just trading, you can continue to sell cover calls. Another great thing you can do is you can go ahead and go further out expiration, which is going to allow you to generate higher premiums. And it's another way to continue bringing in cash to your account. So if you don't already have a position, I wouldn't go out and buy shares to sell cover calls. I would stick with the bear call spreads. But again, if you already own shares, you might as well take in some cash on these shares that you already own by selling cover calls while the market is declining. And that's a great way to keep cash coming into your account as well. And then the last thing, we keep talking about cash. You got to keep cash handy. So I know when the market is declining, everyone's always talking about buy the dip, buy the dip, buy the dip, but you don't know where the bottom is, right? So if you buying the dip all the way down, then you're using up cash. Again, you're buying shares, those shares are declining, and it can get into a situation where you don't want to be in. So keep some cash handy. Wait until you can see the market kind of bottom out and you get to a place where you want to buy shares. You're evaluating these companies and they get to a point where you want to go ahead and spend some cash, buy some shares at a low point, which I do agree with. That's a great thing to do. You buy things that are on sale. Great. Some of these great companies, again, are at 52-week lows where you're going to be able to scoop them up. But I wouldn't buy the dip every time. Just keep cash in hand until you can actually get to a point where you see it bottom out, so you start to retrace a little bit, scoop up some shares on sale. And then lastly, by keeping cash on hand, that allows you to be flexible, right? So you can be flexible. You can take advantage of opportunities. Again, something starts to come up off the bottom. It's at a great price. You can take advantage of it. And, keeping cash on hand is something I would do in any market condition. So that's something you can do in these down markets again, but that would be something I would do all the time. Always keep some cash on hand. Again, it's going to allow you to be flexible, take advantage of opportunities that you're seeing. So those are 3 things that you can do. Again, bear call spreads. If you haven't done that trade before, go ahead and take a look into that. It's a great trade that you can do during declining markets. Cover calls, again, if you already own shares, generate some capital, some cash off of shares that you already own. And then again, keeping cash handy. So let us know what you think, how you navigate these market conditions below. Let us know in the comments. We'd love to hear from you. Also, if you haven't already, go ahead and like the video, subscribe, hit that notification bell. That's going to help us grow the channel. We'd love to see you again. And thanks for tuning in. We'll see you next time.